Welcome, guys. I'll go ahead and address what is happening with this setup very soon, guys. Welcome back. What a day, baby. What a day. There you go. Beauty. All right. What's going on, everybody? And welcome back. Live, as always, for the FOMC meeting in Singapore. What's up, guys? What's going on? I'm gonna be putting a poll right now, very soon. But crazy, right? We'll be watching that FOMC meeting right here, everybody. How's Singapore? It's doing really well. It's 2:30, almost 2 a.m. in the morning here. I took a nap just to get stronger for this one. Usually we are at the office, but in this time, based on all the challenges that I've faced with my internet, this is the best I can do, fam. And whoever's watching us and joining us right now, you guys are the MVPs. So I'm gonna go ahead and just get some stuff ready for us. Can I have some polls here? I cannot. Can I have some polls here? Nope. So it seems like this way I cannot make any polls. Oh, I love you too. Welcome, guys. Let's see. All right, fam, what's going on? Right now, the audio is gonna be turned on more on this one, on the iPad, so we can listen and watch your own Powell very soon on that FOMC press conference. All right. Equities down post decision. Bonds rally on 50 basis point cut. Bonds back up on 25 basis point. Just hoping, in my opinion, 50 basis point. So I'm seeing all kinds of different predictions right now on X. There you go. Woo! Joe in the house. What's going on, buddy? Welcome, fam. Yeah, we're feeling good, guys. Tired, after this, for sure, I'm gonna just relax and enjoy. I'm gonna relax and enjoy for this 100%. I'm gonna try to see if I can make a poll from my side here. It's so crazy, guys. Wow. That is the worst internet I've seen in my entire life. To be fair, it's my computer. It is my computer. Welcome. Spicy burn you love. Oh my gosh. Crazy stuff. Is expanding its business in All right. Now, I can make a poll finally. Let's see how the audio. Oh, come on. Thankfully, I was prepared, and I know this one works, my phone works, but the computer. I'll tell you the story. Why now? We're waiting. Yeah, the computer is giving me a super hard time with the internet. Extremely hard time. You cannot even believe. Okay, good. Audio is fine. Audio is fine. Great stuff. Thank you guys. You're the real MVPs. Now I can finally see the screen how you guys are seeing it. So I'm gonna go ahead and make sure that that screen is much better. Oh, brightness. I have to increase the brightness. That's true. Let me go ahead and increase brightness. There you go. Put it back. Just like that. Oh, come on. This is the funniest thing ever. Can't believe it. It gives me like 20 seconds, the computer, internet, 20 seconds, and then it goes off. It goes back, it goes off. It's my computer from work. And I was telling Zach and everybody, I won't be able to stream my awesome FOMC with my fam. Nobody's having issues but me, but it's okay. Okay, good. That looks much better. And JB in the house, what's going on, fam? Welcome, 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 welcome. Make some noise, make some noise. Okay, so we're 7 minutes away from knowing what's happening. 7 minutes away from knowing what's happening. That's so cool. Oh my gosh, this computer is the worst. Let's get it, of course, bro. Let's get it. So I'll turn the volume on very, very, very soon right now. I'll turn the volume on very soon. Right now it's just a music. Dude, it gives me like 7 seconds of internet. 7 seconds of internet. I'm literally, it's just the most dumbest thing ever, bro. I can't do anything on the computer. 7 seconds of internet. So guys, while I'm just having my time with my laptop, guys, are we ready, man? Are we ready for some volatility? Cannot believe it. Wherever you guys are watching us from, my 200 people watching right now, I couldn't be more ready and excited. I've been talking with so many people. I've been talking with so many KOLs, developers, presidents, you name it, right? VCs, millionaires, multimillionaires, rich people or so. And all I can tell you, fam, is, like I told you earlier today, right? It's worth it. It's worth it. What you're doing right now with crypto, don't stop. It all starts honestly today with this cut, and oh man, you don't want to miss it. You do not want to miss it. Okay, let's go ahead and try to put a nice poll right here. Crypto will, and we'll do easy, pump, we'll do dump, or we'll do same price. There you go. Start poll. All right, we got a poll going. Finally. That's what I'm talking about, everybody. Should be able to see a poll, everybody. Crypto will. Tell me in the comments what you guys are thinking for this one, for sure. All right. Perfect. Just a few more minutes. 5 minutes remaining. So exciting, guys. So exciting. All right. All right. Anyway, I got the poll going, so I'm pretty excited and happy. I'm not really able to see much of the prices. Okay, now yes. Anyway, I have a few, prices here. As you know, guys, the internet here goes up, comes back, comes up. Anyway, I got the poll, so I'm really, really happy. So, guys, I'm looking at the live chat right now. You have any questions? Let me know right now. Easily, we'll be taking a look at that one. We'll be watching the FOMC right here on my iPad. Thankfully, I brought everything what I needed, right, for emergency scenarios like this one. But good that my audio feels well and we have good connection on this phone, guys. What a day, guys. So cheers. This is the coffee from early morning. It's a matcha. It's a good one, guys. How high will car go? To the moon. Throw it knife. Meme coins right now. Hold them while you can, right? Cash out on them, profit with them, make money with them 100%. Kenny, I'm holding the two of them, right? Nobody knows, but I'm holding the two of them. I'm bullish on Pepe and Ponky as a Solana meme coin. I think there's some, you know, there's a decent community for Ponky, so I'm bullish on them too. What's your opinion? Also, pump dump or crypto price stays the same after today? What's going on, Leon? I think we want to have a dump, of course, and then slowly, gradually, we're gonna be coming back. We have to, man. All right, 2 minutes to go. 2 minutes to go, guys. Are we ready? 2 minutes to go. Don't forget to smash the like button, guys, and consider subscribing to the channel. Welcome, welcome, welcome. Two minutes to go. Just going to watch. I'm gonna open up Bitcoin right here, see how fast it moves, but I'm sure that things are gonna be very, very, very spicy. Yeah, right now we'll be go ahead and watch the reaction in the market, and then right here. We're all George. What's going on, George? Happy to have you. I actually saw George. It was funny. I was going downstairs in the escalator. He was coming upstairs in the escalator, and I was like, "Hey, George, what's going on, bro?" Yeah, it was cool. Buy the rumor, sell the news. All right, it's Stu. What happened? You might be able to tell me much faster. Tell me, bro. I'm getting there with this internet. I'm getting there. Here it is. 50 points. 50. OMG, guys. Breaking. FOMC decision. Set interest rates at 5%. From 550 to 570, from 525 to... Okay. Let's go ahead and confirm this, guys. Breaking. Federal cut, interest cut by 50 basis points. 575 to 500. There you go. Everybody watching. Everybody watching. Welcome, guys. Always like to be here for this news. Maybe not in the best setup, as you can tell, and as I've already explained. Already having a hard time with this one, guys. Confirm. Point yes. Yes, everybody. Yes, yes, yes. Welcome, welcome, welcome. We got 50 basis point cut. Can you work? Oh my goodness. Nice, everybody. Confirm 50%. Yes, yes. Let me go ahead and try to pin this one. I cannot pin it. Classic. 50 basis point FOMC it is. The stock market goes wild for now. Okay, I'm seeing now the price reaction. The Fed Reserve cuts rates by 50 basis point bullish trend alert. There it is. There it is. $60,759, guys. I'm seeing it right now. We're going up. We're going up. First reaction right now, the candle. Let's go ahead and go to the 30-minute candle. Oh, I see it. I see it, baby. Bitcoin is pumping right now. Let's go. That's really exciting, man. That's really nice. Bitcoin doing a nicely good green candle. I see it, baby. I see it. I see it. I see it. That's really nice. Guys, great time. Like I told you in the videos before, throughout the entire day of today, the day yesterday, and right now, if you're looking for some big trading, first link down below, everybody. Guys, 300 people watching, just go ahead and click Margex. Make your account up to 10,000 welcome bonus. No KYC, don't need to use any VPN. Just your email to start your account and join me in the trading opportunities, guys, because right now there's a lot of people trading, taking a risk and making some money. You know, there's 5x leverage all the way to 100x positions, and let me tell you, that is really what you want to see in a good trading day, to be honest with you. That's exactly what you want to see in a good trading day. So that's amazing, guys. That's amazing. 60,000 BTC. It welcomes with open arms what's going on right now. So yeah, check it out, everybody. I wish I could have my computer and everything, but no, it is not the case. As you know, it is not the case. We're not back at home, but we're doing the best we can. And thank you so much to all my 300 people watching us. Don't forget to smash the like button so we have more people in the house here watching us at Ramos HQ in Singapore. And we'll be listening to the FOMC press conference right now after this. George, what's going on, brother? Leon Jamas is pumping. Really appreciate the enthusiasm in regards to cryptocurrency. As always, yes. Just for that, let's go ahead and drink more Starbucks. Let's go, baby. I love it. Yes. The first ever rate cut in a long time. Bro. Wow. Cheers, fam. Honestly, really good news. Really good news. Really, really, really good news. That's amazing. That's amazing. The ones pumping will be the exit liquidity for short term. It's true, but at the end of the day, you know, if you're a long-term investor, you're just buying right now out of curiosity, because you don't want to be left behind, you know. Yup. Rate cut. Yes, we got a rate cut, my friends. Great job. Yes, yes, yes. So exciting, guys. We love it. I'm gonna go ahead and see if I can pin that info, because we're gonna have some 50. Okay, let me try it. There you go. I'm pinning the info. There you go. It's pinned now. Confirm 50% rate cut. Thank you. And Army rising up. Appreciate that one, buddy. Crypto Will Pump is winning. 282 votes, my friends. Let's go. All right, Watchaguru already posting as always. Everybody posting right now. Breaking Federal Reserve interest rates cut. Just really nice. The first time in 4 years. That's a big one. Guys, in 4 years. Oh boy. Yes. So exciting, fam. FOMC rate decision is 50 basis point. Fed rate cuts. Good. 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 It's a good time to be in crypto, guys. It's a really, really good time to be in crypto. This is gonna be the first one of many. And I think what he's gonna say eventually is like, you know what, it's time. It was overdue. Last FOMC he didn't do it, but finally September it is. And I'm gonna enjoy this upcoming press conference, everybody. Oh, we all are happy. We all are happy for sure. We all are happy for sure. There you go, guys. We just got to the 100 like number. Awesome, my friends. This is when you know your community cares and your community is the best. I don't have the best setup. I cannot show you charts, even though you know I want you to see the charts. My internet is the worst right now, but we do not stop and we continue delivering greatness for you guys. You know, my fam, the only thing that we need now, Marsky, what's going on? The only thing that we need now is Donald J. Trump winning. That's it. That's all we need, guys. That's all we need. And we're going to the moon. That's all we need. About 20 more minutes for press conference to start. So get ready. I'm gonna turn the volume all the way to the moon. Yes, volume will be all the way to the moon. Let's go SHIBA INU, of course. Shout out to the SHIBA INU army watching. Shout out to the XRP army watching. Shout out to the Cronos fam watching. Guys, I've been grinding here for you, my friends. Been meeting. I made you a 15-minute long video with my man David from the Merry team. So hopefully you guys enjoyed it. To all my Crow fam. Oscar, let me go ahead and take a look at that one. Thank you so much, bro. Oscar, do you think we'll have another chance in 2028 with SHIBA INU and Bitcoin with all the different tones at the bull run? Let me understand that. Do you think we'll have another her chances in 2028 with SHIBA INU and Bitcoin? You mean that it's gonna go high? Like you mean like it's gonna pop off? Yeah, bro. Yeah, of course. Type it in a different way. Sorry, man. It's 2:30 in the morning right now. Thank you, guys. Appreciate it. Woo! And thank you for the kind support, my friend. Appreciate it a lot. Woo! Exciting times ahead, everybody. Exciting times ahead for sure. The night owl. We're here. Harris is leading the popular vote, but not the electoral. Got it. Any medium Brett. Brett Holding, baby. Brett Holding. Pepe Army in the house. Nice. That's what we're talking about here. $60,200 right now. I'm gonna go ahead and refresh. Oh, obviously internet sucks. And okay, there it is. 60,200. I'm very happy because we were literally at around 58,000, but you know, we went back to 60, so that's really, really, really good. How much do you think SHIBA INU will go up? 3017, that's my goal, bro. 3017 for reals. I think we can do it. I think really, literally, we can do it for sure. Holding on that baby has to happen, guys. Yes. But you better start now, guys. Do not delay. Do not delay your transition to crypto. The time starts now. Popular vote don't win the election. It's all about the electronic. Correct, 100%. But I'll tell you something, guys, okay? Let's be honest here. Let's just kind of like tell you exactly what it is for crypto. In the United States, we all know who I want and who most of you want to win. But it doesn't matter who is in charge of the White House. Crypto should be independent. Crypto should be a way and do not. The main point of crypto is not to depend on the government. The main point of crypto and blockchain and Bitcoin is to be decentralized, to be safe, secure, and not aligned with any government agenda, right? We don't need the government to function. That's good. What that means is that we're still gonna see a major bull market in 2025, regardless who is in charge of the White House. That's what I'm talking right now. Do I want Donald Trump to be the leader of the White House of the United States, not only for crypto, but for other reasons? Yes, that's my own opinion, and that's it. You guys have your own opinion, that's totally fine, right? But for crypto purposes goes, I know he might be the best choice for us. And that's the way it is. If he doesn't win, there's definitely gonna be a reaction in the market. I'm pretty positive. It's gonna be a reaction in the market if he doesn't win, say if Kamala wins. But still, we're gonna have a decent bull market, right? It's give or take. It's a give or take. And do not worry, right? Right now it's 2:38, about to be 2 a.m. Let me see. It's 2:15 a.m. here in Singapore for me. To all my friends in Texas, it's 1:34 a.m. Sorry, p.m. In the East, in the East, it's 2:15 p.m. right now. So you guys have all the energy. I'm destroyed. Tomorrow, and you know, once I head back to the States, I'll tell you the latest for sure. But it's been crazy, man. It's been crazy. Today, well, yesterday, I heard Vitalik Buterin speak, major CEOs and people that I really admire. So it's been amazing so far. But yeah, please go ahead and put whatever your mind is when it comes to crypto, right? That's what the chat is for. And we'll go ahead and continue discussing in the next 15 more minutes. We'll have Jerome Powell speak. We'll put it a full blast, and let's just enjoy this point in time in crypto, guys. Should be fun. Should be fun. Cronos, yes, Cronos. Oscar working overtime. We're here, my friend. We're here, 100%. 50 basis points. Yes, you're right. Yes, you're right. That's the way to do it, my friend. 60,000 for BTC. Let me take a look at a meme coin, maybe something. Come on to India, bro. Oh, bro, I know. I mean, great people, right? Any meme coins that is probably doing something unique and cool. Once I get all my internet, I'll show you more, guys, on this one. What's going on, Leonardo in the house? Nicholas in the house. Welcome, buddy. Happy to have you. It's gonna be a 25 basis point. We just had a 50 confirmed cut. Check the pin post, right? I got it for you. Jasmy to $1, dude. Please, that'll be awesome. JB in the house, welcome, buddy. Happy to have you. Woo! Yes, they did announce the cut. We had a 50 basis point. So the previous one was 525 to 550. 5.25 to 550. Now we have 575 to 500. That's what we have. Pretty cool, right? It's exciting. So in the upcoming minutes, as he starts speaking, we're gonna be seeing the price of BTC change really nice and drastically. That's why I'm telling you, my fam, if you want to make the most money, start trading. Use whatever exchange you want, use whatever platform you want, use whichever crypto you want. Go ahead, have fun, enjoy, make that cash, buy to hold, buy to sell. Do whatever you want, right? Enjoy this journey. But if I can recommend you guys, Margex, first link down below. It's really what I think is working for a lot of people. 190 sign up so far, and we have about 23 people actively trading. And I see those percentages. People are making money, and I want more people to do so. No KYC, takes a few seconds. You don't need a VPN, because I know a lot of people are not from the United States. Some people are from the US. Enjoy, guys, enjoy. So check it out. We have also the past, present, future, my PPF indicator made with Luxalgo collaboration. I wish I could be showing you all the stats. You know, I always do that. In this case, I cannot because I don't have everything that I wish, but we're still live. So check it out. Once you click in the second link for PPF, I have a video. It will take you to the website, and I have a video explaining how to use it, guys. So check it out for sure. HK in the house. What's going on, man? Happy to have you. And if for some reason you cannot use Margex, that's totally fine. I do have other exchanges, or you can, in that case, maybe try using a VPN, right? But technically, you shouldn't. Shiba Inu to the moon, showtime. Just 10 more minutes. 10 more minutes, my fam. Isn't that exciting? 10 more minutes to go. Oh, that's gonna be fun. That is gonna be fun, guys. Oh, yes. That's so cool, my fam. That's so cool. Ta 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 ta. It's really good, you know, after so many FOMC meetings. As I was coming and preparing to come here to Singapore, I was like, wait, when is the FOMC meeting? And I was like, oh, it's gonna be during Token 2049. I was like, what? One thing that a lot of us just realized too is that there's the F1 race is also happening here in Singapore. So it's been chaos to sometimes go to different places, get to the conference, go to the after parties. You know, there's a lot going on in different countries, guys, for sure. Pretty crazy. But people are excited for crypto. People are really excited for crypto. That's what I'll tell you. Shiba Inu in the house. Let's go, guys. Nice. we'll go ahead and we'll go ahead, everybody, and enjoy that nice conference. And boom, rate cut. There's a lot of people right now. Super burst. So Bitcoin halving happened, interest rates were cut. What do we have to wait now before an explosion? Brandon, great question, man. Really great question. Can you explain what the bull market is and what makes it happen? Johnny, welcome, buddy. Right now, it's Q3 still. Right now, we still have September on us. Rectember. Happened to be a historic FOMC meeting. So the answer to the question, we just have to wait. At this point, we just have to wait. Let it do its work. Let's go through this week. And I think slowly but surely, we should be able to see that 65,000 very nicely coming in. Preparing ourselves for a nice October. Yeah. Just let it come to you right now. We've done everything right. We've done everything right for Bitcoin to do really, really, really well. Cheers, everybody. Got some water here. Let's go, my fam. What is going on, guys? At this point, everybody, just have positions open. Have some nice diamond hands. That's it. It's going to do its work when you least expect. When you least expect, that's it. Remember, first, Bitcoin. Second, Ethereum. And after that, that's when it goes to altcoins. Thank you, Mark. I cannot really, read the entire thing, but I see very good times, my man. Appreciate it. Because, when the chat is horizontal, it just disappears super fast, so I cannot really read everything, sadly. Mark's in the house. Do not wait until Bitcoin pumps massively to get in. This cut, I knew it was going to happen. We've been talking about it for years. For months. We knew it was going to happen. We've been covering FOMCs for the last 7, 8 FOMCs. I haven't sold my crypto. I'm still holding. Gustavo says October 20th. It's like, it's not surprising that we are pumping. It's not a shocker for me. I'm talking to so many great, amazing people, way smarter than me here in Singapore. Why am I still awake at 2:30 in the morning? Why? Because I know what's good for all of us. Because I know what we're trying to do here, guys. It will change our lives forever. It will. So do me a favor and just smash the like button, everybody. Let more people come in the house. We have a poll running, and we are about minutes away from 5 minutes away. 5 minutes away, guys. 5 minutes away. That's it. I'm gonna turn up the volume so we can listen, enjoy. After that, relax, summarize, and I'm gonna go back to bed because I'm destroyed. Goodbye, fudders, 100%. While you guys crush it in the United States, my awesome US, I wanna, after this, head back to sleep like a baby because I'm absolutely, tomorrow or later today for me is the last day of Token 2049. But yes, guys, why are we here? Because if you start crypto when everybody wants to start and buy, then you're doing crypto wrong, guys. You're doing crypto wrong. SHIBA INU army watching, XRP, Cronos. I'm not an AI machine. I make mistakes. I'm a human being, and I'm proud of it because that's the experience, guys, right? You don't know everything. You learn from everybody. So what keeps me at peace a lot is that I know that the amount of capital that I have invested in crypto is enough to retire by the end of 2025. Literally, quitting my job is gonna be the easiest thing to do, and that's it. I mean, that's gonna be the first step into financial freedom. Don't need to go anywhere anymore else to a location, right? That's it. Feeling good, everybody, honestly. And if I can tell you something personal, I'm somebody who kind of likes to stay home, like, don't travel or so. But since I already went to Toronto and I'm here in Singapore, you just have to travel, man. You just have to experience the world. You just have to open up your imagination and just receive from other different cultures, and I'm loving it, man. So God willing, once we already have a little bit more capital, so we don't have to worry for making money every day, I'll just take my wife and I will just go ahead and explore the world, right, and see how crypto is changing lives. So it's gonna be very much worth it, and I want you guys to join me in that. I want you guys to join me by making also good money with me. And you start right now. You start right now, because I do not want to be putting, I honestly do not want to be buying one full Bitcoin when Bitcoin is already at $100,000. What? Why am I buying one Bitcoin at $100,000? Oscar, you stupid? Are you really that dumb? You waited years, Bitcoin under 100,000, and now you're buying because it's 100,000? No. That's not the way to do crypto, okay? Do not buy when everybody's buying. Do not sell when everybody's selling. All right, my fam. 2 minutes to go. 2 minutes to go. If you appreciate these updates, guys, look, we don't have the best lighting. We don't have the best internet. We don't have the best setup. We don't have the best, but we have the best community, and that's enough. Oh, my fam. There you go. There you go. It's all for you guys. It's all for you. And shout out to my man Zach Humphreys, who's also live streaming. I'm in this room. He's right across from me. So we're just grinding for you guys. Shout out to my man Zach. Shout out to Connor, Kenny, great content creator I met here. Crypto Moses too. I've been meeting so many content creators here. It's been really, really, really good. Okay, guys. Potential price for Mary. Honestly, I'm so excited for Mary. For many different reasons, but I'm actually excited for Mary. Yeah. Best community. Cryptosaurus in here. Let's go. Okay, guys. There it is. All right. Everybody, we are live. 50 basis point. Jerome Powell about to speak. Listen up. Let's enjoy. And I'll tell you some updates with the price charts, all right? Smash the like button, everybody. Very happy to have 400 people watching. Here it comes.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand in the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year.
Bitcoin up close to 61,000.
But remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June.
61,000
Inflation
Bitcoin.
has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished, and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Let's go.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking our questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed and made the committee go 50? And how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in. Since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make the, sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we are contemplating. I would point you to the SEP as just an assessment of where what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Good, Chris.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%, and inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment, moving to a more sustainable level. So that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral.
What is happening, everybody, and welcome. I'll shut up soon, but
as slow as we think is appropriate in real time.
for those who are just coming into an FOMC,
accumulation of individual estimates of what that will
the
be in
pump
the base case.
or dump happens days after,
Howard Schneider with Reuters.
few days after.
How close
We'll
was
see
this in
it.
terms of the decision? You do have
This
the
is
first
good news.
dissent, by a governor
50
since
cut is good
2005,
news.
I think. Was the
Just be
weight
patient a little
clearly
bit.
in favor of a 50,
It's coming.
or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut and left it open. And I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books, can you give us some guidance as sort of follow up to Steve on the pacing here? Would you expect this to be running every other meeting once we get into next year?
Yeah, we're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can make a good, strong start, but. And I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Gina.
Good stuff. Love it.
Hi, Chair Powell. Gina Smilik with the New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in a solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Sorry, Nick.
Yes, everybody. So far, 1 to 1+% pump for most of the cryptos. But just wait a few hours, wait a few days.
Does today's action constitute a catch-up
Should have
in
some
action
action.
given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Okay. Multiple questions in that list. So I would say we don't think we're behind. We do not think we think this is timely, but I think you can take this as a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about
We're
what
ready.
happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably under 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is, look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop.
Yes,
in a
we are
way that
live.
causes us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby. Thank
Nice.
you, Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. By many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018-17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, the retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the
Watching
point
them or
about
watching.
starting
Shout
to
out
see
to you,
rising
fam.
layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So that's our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors.
Cutting
that we consider.
cycle,
Of course,
that's
we're gonna look
important.
at the totality of the data
More
as we
to
make
come.
these decisions meeting by meeting.
More cuts to come, everybody. Forget to smash the like button. Shout out to you guys. 2:30 a.m. here.
TV and radio.
Grinding.
To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
We're going to be watching all of the data, right? So if, as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So. And policy, we think, is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment, and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and
BTC trying to break 61 again, everybody.
Take a step back. What have we been trying to achieve?
Telling
We're trying
you.
to achieve a
Give it some
situation
time.
where we restore price stability without the kind of painful increase in unemployment that has come sometimes with this inflation. That's what we're trying to do. And I think you can take today's action as a sign of our strong commitment to achieve that goal.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's, we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be, their wage increases rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies over, per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person. As measured, it's now around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, I could go on and on. There are many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change particularly over the last few months. And so what we say is as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. don't look for anything else. We'll see another labor report. We'll see another jobs report. I think we get we get a second jobs report on the day of the meeting, I think. No, on the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. You know, it's always a question of look at the incoming data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think what's the right thing to do. Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Nice. Everybody, welcome back. 450 people watching.
We've only
Let's
been
go.
running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, you know, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed the unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I think we are. It's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment. But it's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
Employment, job market. That is what they're speaking right now.
Edward Lawrence, Fox Business.
Love it.
So we've heard some speculation that you may be going with the federal funds rate to 3.5%, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. Now, some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question. You mean after we get through all of this? It's just a great question that we can only speculate about. Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates, and it looked like the neutral rate might even be negative. So people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But honestly, we're going to find out. But it feels to me and that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. We only know it by its works.
It's true. How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah, so this is my fourth presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it, and that's always what it is. It's never about anything else. Nothing else is discussed, and I would also point out that the things that we do really affect economic conditions for the most part with a lag. So nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind. And it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.
Welcome everybody. Don't forget to smash the like button. We're here listening to the FOMC after a 50 basis cut.
CBS News. My first question is,
Crypto
very simply,
running.
what message are you trying to send American consumers, the American people, with this unusually large rate cut?
I would just say that, the U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy. And we'll do that by returning rates from their high level, which has really been, the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level. Over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
That's a good question.
We're not. So inflation, what we say is we want inflation, the goal is to have inflation move down to 2% on a sustainable basis. And, we're not really, we're close, but we're not really at 2%. And I think we're going to want to see it be, around 2% and close to 2% for some time. But we're certainly not we're not saying mission accomplished or anything like that. But I have to say, though, we're encouraged by the progress that we have made.
That's really nice.
Katerina Saraiva with Bloomberg News. I just would love to know kind of how the committee is thinking about the persistence we've seen in housing inflation. Do you think you can return to 2% with housing inflation where it is? Yeah.
So housing inflation is the one piece that is kind of...
I want to take my time right now to speak because housing inflation doesn't really affect us much, guys. But welcome 2+ a.m. here in Singapore. Shout out to all my fans watching from the US and from wherever you guys are watching us from. Thank you for all the awesome comments I'm listening, I'm seeing. And I'll tell you guys, you have to give it some time for the markets to adjust. This is the first federal funds rate cut that we've had in 4 years. They were just talking right now a few minutes ago how the rate was 0%. An entire generation, guys, a few 1+ year got 0% on many different things, which is interesting, right? I remember here in the United States getting houses and loans for cheap. That, he says, is not going to happen again unless another pandemic, God forbid. When it comes to our crypto, SHIBA INU, I see your comments. XRP, I see your comments. Cronos, I see your comments, guys. Things are changing. It's gonna happen. The altcoin season is ahead. They're also talking about the U.S. election right now. Headline is at 2.5%. Core is at 3.2%. Once core inflation finally breaks that 2% at 2.9 or so, that's it. Things are gonna do much better, but we have to wait and give it some time. Next FOMC is on November, if I'm not mistaken. So let's continue. I always like to talk.
Sell their home, so because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer.
I'll tell you the story very soon.
Obvious how much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to find, to zone lots that are in places where people want to live. It's all of the aspects of housing are more difficult. And, where are we going to get the supply? And this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Victoria.
Hi, Victoria Guido with Politico. Just following up on some of the labor market talk earlier, you know, monetary policy operates with long and variable lags, and I'm wondering how much you see being able to keep the unemployment rate from raising too much comes from the fact that you're starting to act now, and that's going to give people more room to run versus just the labor market is strong. And then also, if I could, following up on Nick's question, do you see today's 50 basis point move as partially a response to the fact that you didn't cut in July, and that sort of gets you to the same place?
True.
So you're right about lags, but I would just point to the overall economy. You have an economy that is growing at a solid pace. If you look at forecasters or talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy is basically fine. If you talk to market participants, I mean, you know, business people who are actually out there doing business. So I think, you know, I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking about July, and I guess if you ask, you know, if we'd gotten the July report before the meeting, would we have cut? We might well have. We didn't make that decision, but you know, we might well have. I think that's not, you know, that doesn't really answer the question that we ask ourselves, which is, let's look, you know, at this meeting, we're looking back to the July employment report, the August employment report, the two CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? We knew it's clear that we literally everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Elizabeth. Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
There you go.
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say, you know, that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restrictive. We expect that process to take some time, as you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well.
Nice.
However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households? Well,
what I can say to the public is that we had a burst of inflation. Many other countries around.
All right. Over 1,000 votes, everybody. That's when you know you have an amazing community. And that's when you know everybody over the last couple of years we've been waiting for this. Guys, I think I already got the main idea. Let's go ahead and do this thing. There you go. Now you see me much better. You know me. I'm all about the lighting. Welcome, welcome, welcome. I'm going to give you the summarized spiel for like about 5 minutes. And your boy is going to hit that bed super fast because I got to wake up later today for second day Singapore. Welcome everybody, Oscar Ramos Live. Shout out to John316. Shout out to all my mods. Shout out to all the new subscribers. Shout out to all the new viewers. Shout out to all of you fans because you make it special. What happened? The United States inflation, the United States pandemic, after pandemic mode. There's a lot of things going on. It wasn't easy, but finally, the employment rate, the unemployment rate, the jobs report, the jobs market, and everything is coming back to normal, and it's getting stronger. Not only that, Jerome Powell, the United States economy, there's some, different news coming up, including the US election, including the bull market of 2025. Nothing says be fearful right now. No, guys. It's time for us to be mega bullish. There's time for trading. Volatility is here. Pin comment, everybody. That's going to be Margex. As I've explained before, do it right now. You still got time. Links down below. But the first thing that we have to address is that this is going to be the first 50 basis point of many, 25, 50, 75. This is really going to be pretty cool, guys. So get ready for more cuts ahead, because they want to go all the way down to the mid threes. Right now we are 475, 500 in the federal funds rate. So that's really, really cool. From 5.25 and 550. Okay, pop the bottle. I'll tell you at the end. Thanks for reminding me, for sure. But yeah, I think what we're seeing right now is obviously the reaction of the market, about 1% plus Bitcoin, Ethereum. Not much, right? As far as, whoa, this was an amazing cut and everybody exploded, right? But my man Josh, appreciate everything you do. Thank you, Josh. You are the man as well. Thank you. That's why you're still in my group. Whatever you need, just let me know. But what I'm saying here is the following. We've been watching, these numbers. We've been watching the FOMCs, and we always get crazy because we know this matters. And the economy, if the economy does well, people will have more money and they will buy and put it into crypto, put it into different assets. They want to get out of the usual retirement gold type of things, stocks that maybe don't make them so much money. That's when we come in. That's when crypto comes in. So overall, everybody, I think this was a bullish FOMC. On the bright side, guys, and I was looking at some of the comments, and you guys are totally right. We didn't crash, and 60,000 is our new average. 60,000 is a nice consolidation price. Thank you, Josh. 60,000 is not bad. Where's 30,000 Bitcoin? Where's 40,000 Bitcoin? Where's under 50,000 Bitcoin? Where is it? Oh no, run for the hills. Guys, isn't this supposed to be Rectember? Isn't this supposed to be the bad time for the market? And look at us at 60. We did it. We have survived. Many of you watch me for Shiba Inu. Many of you watch me for XRP. Many of you watch me for Cronos or other ones. Yes, they're not moving. They're boring. You get tired of it. CRO especially. XRP, still at under 60. Shiba Inu, everybody losing money with it. Pepe or other ones. I know, because there's no new retail. People don't want to buy. They're scared. Well, that's when you technically should look at yourself in the mirror and tell yourself, should I start doing now? Because are you supposed to go in once everybody does it? No, right? BTC is gonna go from 60 to 65. You're not gonna notice. From 65 to 70, you're not gonna notice. But once it goes from 75 to 80, everybody's gonna be like, oh, OMG, wait, should I buy right now? And you will come to a live just like this one, and I'll tell you, where were you? Where were you, right? But if you're subscribed to this channel, everybody, Oscar Ramos bringing you news at 3:30 in the morning Singaporean time. I'll tell you always like it is. That's the way to go, right? So overall, guys, I feel incredibly bullish. It's time for us to make some money. I know there are some times for us to sell, and what I've been telling you, and I'm transparent, 2025, late, goodbye crypto to a certain extent, because I'm obviously gonna still continue in crypto as a community member and as a holder, but that's when we cook and make some good money. Andrews Gaming, thank you very much, buddy. Appreciate it. Welcome, welcome. It's because of you guys that we're here for sure. So anyway, guys, the learning never ends, and I couldn't be more proud and excited to have a community like your guys. We got 400, almost 500 people here, of course, crazy times. And for those asking, yes, sleeping, what is sleeping? I really haven't slept a good long 8 hours. I haven't. It's been crazy. Walking around Singapore, it's been amazing meeting great people. And the bottled story that it's actually, it's crypto NFT integrated. They're about to launch this coming weekend. Solana project. They gave us champagne. It's like one of the finest champagnes. They took us to this Michelin restaurant in Singapore. They fed us up with some amazing food. Singaporean things, you know. Once you come here as a KOL, key opinion leader, and you start talking to really nice people, and so, well, endless opportunities. So that champagne there is just one token of appreciation that they gave us, and that should be pretty nice. Anyway, guys, my friends, thanks so much for coming to the live. That's all I got for you. This guy has to sleep for a long time to recover and bring you more news and updates later today. Thanks, guys. JB in the house. Everybody watching FOMC Live. First 50 basis point in the books now. So wait it out, because this weekend we might have some very good fireworks. God bless you all. Take care. Thanks so much for watching. Like and subscribe, and I'll see you next time. Peace. Let's go, everybody. Have a good one. We did it.